Good morning, everyone. Morning, morning, morning. It's Monday, May 20th. In Canada, it's the May 2-4 slash Victoria Day long weekend. So there's, I guess, depending on where you are, obviously it's a slower start to the week. But this week, we're going to wrap up a full week, and then next week on Monday, there is a market closure. So, hope everyone is doing well. Like I said, May 20th, start of the week here, Monday. And this week, the main news that's going to be on everyone's watch is going to be NVIDIA earnings as well as FOMC. So, good morning, everyone. Everyone that's dropping comments, I appreciate it. So this week, all eyes are going to be on NVIDIA and the FOMC on Wednesday. So honestly, we could see a slower week leading into that. Monday, Tuesday, not really too much around. There are some Fed speakers that are going to come on the wire. Jerome Powell also came on last night on Sunday, which was interesting enough. But everyone's going to be watching NVIDIA. Right? It's the last one of the big tech names, Magnificent Seven, to report earnings, which is going to lead the charge for the next move in these markets, most likely. A lot of people are watching this with a large potential to see a swing higher. Generally, NVIDIA does extremely well on those earnings moves. Last few times around, we've seen gaps or continuations to the upside. And the chip giant is perceived a leader in the AI world, right? The artificial intelligence space, and is scheduled to announce fiscal first quarter earnings on Wednesday after the bell, May 22nd. So expectations are sky high, especially with Jensen and his Jensen-led firm having repeatedly delivered blowout quarterly reports showing massive demand for its AI chips. Its result will act as a barometer for the AI craze, and another strong performance could help Wall Street to record new highs. Now, Wednesday we'll also see the meeting minutes out of the Federal Reserve's April/May monetary policy meeting. However, market participants could receive comments on policy as early as tomorrow, with Fed Chair Jerome Powell set to deliver commencement remarks at the Georgetown University Law Center via pre-recorded video. So other major earnings this week are going to be Macy's, Target, and Lowe's, generally speaking. But as we can see, NVIDIA is not shy from all-time highs, right? The all-time intraday high was posted on March 8th at a high of 974, right? We started moving through those, especially with earnings. I think that 1,080, 1,100, that area is going to be an upside area of target as we bounced off of these lows very, very aggressively over here. This was the low of late April, where everyone thought the world was going to end. We're now up about 24% on NVIDIA. So as we look at this, there's another investor event as well. Microsoft will hold its annual Microsoft Build event for developers in Seattle. Microsoft is expected to show off its next major Windows 11 update, which will ship first on new Qualcomm Snapdragon X-based PCs in June. And generative AI will be a major focus at the Build event, with AI Explorer anticipated to include a set feature that utilizes next-gen NPU hardware to allow Windows to run AI in the background. So Microsoft has already said that it will equip Windows PCs with AI features, right, including the dedicated Copilot key. And Intel and Asus also have plans to introduce PCs with AI accelerators. And other notable events this week ahead include Norwegian Cruise Liner's 2024 Investor Day, the 4-day Dell Technologies World Event, and the 4-day Advanced Clean Transportation Expo with rare conference appearance by Tesla, and the 2-day JP Morgan Global TMT Conference and American Thoracic Conference, which includes presentations by some pharma names. So that's not necessarily too important or something that I deem very interesting for this week ahead. Mainly, I'm going to be focused on midweek. We can see that Microsoft and a lot of tech right now has been rolling higher ever since late April. But I still see the reality of the situation that tech is still getting flown out of, right? Like market money's flowing out of big tech and getting put into other names, right? We've seen there's more strength in the SPY in itself, the S&P, and some of those S&P names rather than too much in big tech. Microsoft one of the big names in AI as well, one of the big leaders in a lot of these moves, has seen kind of a topping formation. We've failed to make new highs on this. So it's going to be very interesting to see how NVIDIA and their earnings kind of appear as we get into a period where we could start to see some shakeups in these markets. I'm not saying that we just start dropping from here, but I think it's about time to start seeing a sideways motion in these markets as we've reached into these highs, to start oscillating a little more rather than just continuing this massive gap up continuous frenzy. So the last few sessions here, we've been a little more chill, I would say. From the end of last week, we're gapping up ever so slightly here this morning, but it doesn't look like anything too crazy. So not that I'm trying to find where these tops are, or continuously try to just like push this lower and lower and lower, when the reality of the situation is they're still sustaining some of this upside momentum. So I'm going to have to use specific barriers and pivots. If we start accepting auctions lower and distributions lower, for me that speaks more of a high probability for prices to actually turn to the downside rather than trying to anticipate where they are. So in the meantime, just looking for continuous longs until those distributions to the downside actually break. So let's see. Markets are only a week away from new settlement cycles as Securities and Exchange Commission, the SEC, and the Depository Trust and Clearing Corporation, the DTCC, move the industry to a T+1. Currently, market players are required to physically deposit stock in an account within 2 days of making the transaction. This process is known as T+2. And during that time, brokers have to post collateral to the DTCC because equity prices can fluctuate over those 48 hours. And some buyers and sellers are using margin/borrowed shares, so the lag can make sure that everything turns out all right. So for many years, the market has operated on a D+5 settlement cycle when security transactions were done manually. In the 1990s, the SEC shortened the settlement cycle to 3 business days, which reduced the amount of money that needs to be collected at any given time. It was only in 2017 that the Commission moved to a T+2, calling the previous standard an outdated settlement cycle due to the improvements in technology, emerging new products, and growing trading volumes. So note, the move to the T+1 will also impact ETFs, certain mutual funds, REITs, and MLPs. One of the biggest catalysts to speed up the clearing timeframe was the meme stock trade frenzy of 2021, which ironically just resurfaced over the past few weeks. I think it's a little dead at this point, realistically. You take a look at GME. It's really done a round trip here. So brokers were forced to post collateral during the settlement period and eventually had to restrict trading to ensure that they had enough margin in their funds held by the DTCC. And some have even called for real-time settlement, like Robinhood CEO Vlad Tenev, who came away from the GameStop saga with condemnations from the retail crowd, given that the platform's slogan was to democratize finance for all, right, quote unquote. So the benefits of an even shorter settlement cycle are controversial necessarily. This could eventually fail to produce market participants by not giving enough time to detect failed trades and correct statement instructions or deal with the compliance issues. Instant settlement, which is T+0, would also require expensive updates to almost all market infrastructure that could do away with benefits like settlement netting, strain dealer resources, or weigh on important trading tools like margin purchases of stocks. And other alternatives are also being explored, including T plus 0.5 or T plus evening, where the market trades will be settled in the same day in itself. So we'll see how that shapes up, but it's interesting as volumes grow, the speed of execution grows, and this is another step forward. So in terms of some of the other news, we've seen that, what do we have here? Red Lobster officially files for Chapter 11 bankruptcy. This is just a funny thing. Well, maybe not funny to some people, but it's just one of those random things I'm going to decide to include into this. But Red Lobster filed for Chapter 11 bankruptcy after it buckled under mounting losses, costly leases, and rising material and labor costs. The company intends to use the proceedings to drive operational improvements, close restaurants, and pursue a sale of substantially all of its assets as it's going as a going concern. So Red Lobster also announced a stalking horse bid from its existing lenders and $100 million debtor in possession financing. The bankruptcy caps off years of financial troubles, which prompted top shareholder Thai Union Group to look for an exit of its stake. So this week, as we start off with the equity markets here, we've gapped up, rallied up on the Sunday session before pulling back here pretty much into the open of the Sunday session. We have Fed's Bostic that's going to speak today, Fed's Barr as well, Fed's Waller, Fed's Jefferson, and Fed's Bostic later tonight, all throughout the day. So we just have a day full of Fed speakers that start now. Two of them are speaking right now. So we'll see how those things shape up, as we're generally expecting low volume and volatility to begin the week. However, into the middle of the week, I think everyone's just waiting for the FOMC meeting minutes as well as NVIDIA's earnings. So it could just be a slower week as we enter into a long weekend coming up. With a little more volatility placed into the latter portion of the week. There are a lot of Fed speakers that are jumping on, so we'll see how that shapes up. But I'm expecting Monday, at least like today, not to be super crazy. The volume right now on the S&P 500 is under 110,000 contracts barely traded since Sunday's reopen, which is really bad. We've got about 15 minutes until this market opens, and generally if we're under 250,000 contracts traded on the S&P on the futures before the market opens, I don't expect too much movement, especially in the morning session. So as I'm looking at this, I'm only going to be bearish on the S&P 500 under 53.24, otherwise probably just buy dips. And that's my plan to start the week. I'm going to be trading small, trading tight, trading less into Wednesday, Thursday, and then barely on Friday, because again, this could be one of those weeks where we have just slow movement that gets a lot of people chopped up, screwed, and then we find ourselves in a very bad position that we never should have been and could have been avoided if we were a little more patient and didn't trade as much. So keeping that in mind, let's start Let's start Monday off well. Let's start the week off well. I hope everyone has an amazing weekend and is ready for this week coming up. And I'll see you guys tomorrow and into some of this big news that comes out in the latter portion of the week. So thank you, everyone. Enjoy, and let's get Monday